This is NDTV, and you're watching NDTV Profit.
Let's talk money and get all your money questions answered right here, right now. But first, a very big thank you to all my viewers. So many of you send us mails full of warmth and appreciation for the show. And you know what? It's a big motivation, not just to me, but my entire team to make sure the program works for you and achieves its very basic goal, to inform and enlighten all of you when it comes to making the most of your hard-earned money. We make sure all the questions which come to us are answered by India's leading financial planners, either on this show, whatever time we have, we take those, or they're answered offline and the answers are posted on our website. You can also see any of our past episodes on the website. So do send in your questions, and we'll now begin with welcoming our planners today. Sanjeev Bajaj, MD Bajaj Capital, and Mr. Anil Rego, CEO and founder Right Horizons, joins us from NDTV Bangalore studio. I'm going to go straight to the questions because we've got a caller waiting on the phone line. Soumya joins us on the phone line. Soumya, thanks very much for sending us yours and your husband Venkat's pictures. It's always great to put a face to a name when you're taking any money question. So let me start by asking you, do you actively take part in deciding where both of you invest your money?
Yes.
So you do know a lot about financial products. I'm so happy to hear that. Go ahead. What would you like us to help you with?
Actually, we want to attain a corpus of rupees 1 crore by the year 10 to 15 years. And my question is that we have invested certain amount through SIP in certain portfolios, which I've already mentioned in my email. My question is whether my investment made in these portfolios are correct or it requires any changes to be made.
All right. You want to know whether you're on track to achieving that figure of 1 crore in 10 to 15 years. There's a lot of difference between 10 and 15 years. That's number one. And I think the big question is 1 crore enough? I mean, look at the inflation. Look at the way prices are rising. 1 crore may just not be the money that you want to target for a comfortable lifestyle. And remember, all of us are living as long as 80, 90 years. Our longevity has increased hugely with good medical care. Anil Rego, coming to you first. Soumya, targeting 1 crore in 10 to 15 years. Not enough, isn't it? That's what you said us in your answer as well.
Definitely. I think 1 crore will definitely be short for her. Actually, you need to start off by looking at, what is your monthly expenses, and then, compound it with an inflation figure. And if I just take, an example, say 40,000 rupees a month, in 15 years would actually require almost like a pension of 1.1 lakh a month. So that's a terribly large corpus that you will need. And 1.1 lakh also will keep increasing by the year, post-retirement as well. So I would guess, you will need something like about maybe almost like a couple of crores there to be able to achieve the same need. And I think you're on the right track in terms of, some of the investments one has done. All diversified equity funds, and you've gone across gold, you've done large cap, mid cap. I think what you can do is take a slightly aggressive stance at in the next few years, and as you come closer to retirement, then you start reducing your debt equity exposure, and probably at retirement you can just hold maybe 25% into equity.
So, Soumya, that's the first thing. You need to increase your target. 2 to 3 crores is what you should be targeting. 15 years, 3 crores definitely, and 2 crores is a figure you should be able to reach. You've got a reasonable amount of savings. There's a lot more in terms of insurance needs. That's another important aspect that she needs to do. And 4 lakh cover, health insurance seems good enough, Sanjeev, but life insurance seems almost negligible in their case.
Yeah, I think that your insurance portfolio is very, understated. You guys need more insurance. So probably you can look at adding a term plan, which can be a low-cost internet term plan, or a full-service term plan, low-cost term plan, or you can look at a term with return of premium plan, which I feel may be slightly better because it offers benefits like no lapse guarantee and some other benefits that we have explained in the past. So, but you definitely need to add now, especially since you are looking at adding real estate to your portfolio, which is a long-term commitment. You're taking a home loan. So, and what I would like to say on your portfolio, I think you're doing well and you keep on investing, but you need to add real estate to your portfolio, which is very necessary necessary, which you're already thinking about. You need to add insurance, and you can also look at adding a ULIP. See, ULIP, what it does is that new ULIPs are very low cost, and they bring in a disciplined saving, and they are generally likely to be more compliant when it comes to the DTC codes and all. So they are likely.
I'm going to defer there on the ULIP, because on Let's Talk Money, we say that you need to get smart and you actually need to maximize your returns. So no ULIP, Sanjeev. But that's a disagreement. We can agree to disagree there. I would say mutual funds and term insurance.
See, mutual fund and term insurance are ultimate combinations.
But on Let's Talk Money, we've always maintained that you need to maximize the returns on your investments. So take the cheapest term cover online, go online, compare the policies. And in your case, Soumya, I think 50 lakh cover is something that you must begin with and go ahead. Some of the names which have been suggested by Bajaj Capital are Aviva Life Shield Platinum, Kotak Preferred Term Plan and Birla Sun Life Protector Plus. Also on your mutual fund portfolio, your portfolio is looking fairly reasonable, good. But if you are a little risk averse, then I would say stick with SIPs and HDFC Top 200, Franklin India Blue Chip, DSP BlackRock Top 100. These are some of the good top quartile funds as recommended. And you also can look at a couple of mid-cap names like IDFC Premier Equity Fund. Next up, we've got a caller joining us on the line, very much in love with his beautiful wife, Jitendra Kumar Chopra, 28. Jitendra, thanks very much. I'm so happy to see those pictures. Young, confident, so sure of yourself, and no qualms about displaying your deep love for your better half. You make a very lovely couple. So with that, I'd like to then ask you, what's your question?
Yeah, ma'am, as I've already given my entire portfolio,
Okay.
I would like to know whether the investment, what the portfolio is done, is good or not.
Okay, we have your portfolio for all our viewers. We are flashing that on our screen. What I can see, Sanjeev, is 13 funds, 6 ELSS and 7 more. That's too many.
I feel that you have a very dynamic advisor who's giving you too many options. So friend, I would like to suggest is that please decomplicate your life. Bring down your exposure to at max 5-6 funds, so you can focus on them and you can track them, and you can be sure that you are invested in some of the best mutual fund picks. I think your portfolio is very healthy because you have got the right mix of equities, commodities, medical insurance and property. But where I think you have not mentioned or you're slightly understated is your life insurance need. You're married, you have a, I'm sure you have a child or you're planning to have a child. So you need to have a term plan or a term with return or premium plan, which is definitely required. You buy it at a younger age, you'll get a much cheaper rate.
And the pictures that Jitendra has sent us also show that he enjoys life big time, send us lovely pictures with his friends as well. Anil, he had a couple of other questions. You also like the way he's saving and his portfolio, but he wanted to understand that, how much return should he build in from his mutual fund portfolio over the next 10 to 20 years? And that's a question I think relevant to large population of viewers who's watching this show as well.
Sure, definitely. First of all, I must congratulate Jitendra. I think he's done a fantastic job. At his age, I've not seen too many people with portfolios like y'all, like what you have. And I think even, just one point probably on the real estate, I would believe at this point, I would rather go a little slow on it. Yes, you've done a land investment. Typically what happens is, you end up taking a house, an EMI, and that impacts the rest of your diversified assets. And unfortunately, as per the Indian tax law, the way it goes, you stay in a rented house and you actually buy your own house and give it out and rent, it'll probably be more tax efficient. But so I would want you to have a balance there. I think only when you're able to support that EMI, get into your house out there. In terms of what are your portfolio likely to go to, I think 15 lakhs as of today in 10 years at a 10 to 12% return will give you something like 40 to about 47 lakhs. You also asked what about, if it's 10 year longer. Yeah, if it's 10 year longer, 20 years, actually, the same amount will, more than double. It'll go to almost like 1 to 1.5 crores. Okay, so that's the compounding impact. So that's the first point. The second question you had was, if I continue to put in 2.5 lakhs per annum for 20 years, what will it go through? So it will be something like almost like 1.6 crores to 2 crores, depending on this 10 to 12% return that you are able to get. So totally you almost have like 2.6 to almost like 3.5 crores in a combination. And I think that will actually give you a very good corpus to also be able to look at a retirement and early retirement as well.
There you go, Jiten. So we are also giving you many more years of free time if you do reach a corpus earlier, and if you keep increasing your investments every year with a salary hike, then I think you're on a very, very safe path and on a very solid path to an early retirement. Up ahead, a new medical insurance plan, and what are your loan options if you do need 10 lakh of rupees to ride over a money need like a wedding in the family. You're watching Let's Talk Money. We'll focus a bit on a new medical insurance plan from L&T General Insurance. Our attempt is to bring you new products which have an interesting feature or something new and better. We chose this product this week because of one key feature, which is zone-based differential pricing. The plan is called My Health Medisure Prime Insurance. My colleague Supriya explains what this holds.
Thanks, Manisha. Yes, L&T My Health Medisure Prime Insurance does offer zone-based differential pricing. Let me explain you how does it work. What this essentially means is that a policy holder can opt to pay premiums applicable to 3 zones. Zone 1 consists of all the metros like Delhi, Mumbai. Zone 2 comprises of Tier 2 metro cities like Hyderabad, Bangalore, Pune. And third zone comprises of rest of India. Policy holders in Zone 3 will be charged lesser premium than those in Zone 2 or Zone 1. Now, if a Zone 3 policy holder opts for treatment in other 2 zones, he or she will have to bear a part of the expenses, which might range from 10 to 20% of the approved claim, depending on zone of treatment. However, those who belong to Zone 1 can opt for treatment across country without paying anything from their pocket. Another striking feature of My Health Medisure Prime Insurance is that it provides an additional cover equivalent to the sum insured, which actually doubles the sum insured for certain listed critical illness. So if you have a sum cover of rupees 5 lakh and you are in the age bracket of 26 to 35, the premium you need to bear will be around rupees 10,000 in Zone 1, around 9,000 in Zone 2 and rupees 8,000 in Zone 3. And this sum insured can be filled up again once in 12 months in the event of second hospitalization in a year due to accident, maternity or newborn cover. So My Health Medisure Prime Insurance with some fresh features is definitely to watch out for.
Supriya, thanks very much. Sanjeev, new product looks very interesting, and I think the key thing where it says that entire sum insured gets used and there is a second hospitalization due to an accident, the sum insured of your policy is reinstated or replenished. Too good to be true?
No, see, it's actually a feature. They have come in later, so they know that we have to compete in this market and we have to offer something awesome. Otherwise, people won't come to us. And, they are slightly late into this market, so they want to come with all guns blazing. It's actually not double, it's triple cover they're offering.
My God.
So what they're saying is you take a basic health insurance of 10 lakh rupees, which should cover most of the ailments. And then what people do is that people actually over-insure. So they'll take a 20 lakh sum insured, but 20 lakh you'll only increase reach in case you have some critical illnesses like heart disease or cancer, etc. So in case of major critical illnesses, so rather than having a 20 lakh base cover, they are saying have a 10 lakh base cover. We'll give you 9 critical illnesses, we'll give you a cover of 20 lakhs. Suppose you have even consumed 20 lakhs and you're in an accident. At the end of the day, they don't want any of their clients to be denied treatment. So they are saying there's an additional cover of 10 lakh rupees above in case you're for any accidental related medical emergencies, even if you have exhausted your base and the top-up cover. So actually your person's cover on a 10 lakh policy can go up to 30 lakhs also. But you have to understand that, look, those costs are slightly inbuilt, but the way they claim that they have priced their product, that in case of a premium segment, they have kept the price at a very competitive level. And in case of the normal products or the lower end products with the lower benefits, they are slightly more premium, but they are giving benefits like guaranteed renewal till the age of 80. So there are some very, very good features. There is a guaranteed response time, which is something like a pizza delivery, which has happened for the first time. So they say that if you don't respond within 6 hours in case of cashless, we'll pay you 1,000 rupees. In case of non-cashless, 6 days, which is an awesome response time, that if you don't respond within that time, we'll compensate you for delaying you. So these are some very new, unique features. So I think it's an exciting plan. The scenario is getting competitive. It's good for the investor.
There you go. New plan, better features, and definitely one of the best if they deliver on all that they promise. And that's L&T My Health Medisure Prime Insurance, which is a new product that we just evaluated. Okay, back to taking questions. Sharvanan Shanmugan joining us from Chennai, only 26. And that's why I love this show, because the profile of the investors calling us is getting younger and younger, and you can do so much with their portfolios. Sarvanan, I can see a sea in the background. Is it Mahabalipuram?
No, it's not Mahabalipuram. It's Varapalani.
All right. It looks lovely, though I must say that I thought you're calling from Chennai, so Mahabs must be a favorite hangout spot for all you friends and all of you, isn't it?
Yeah.
Okay. Go ahead. What's your question?
The question is, actually, I'm 26 years old. I'm currently working in some private IT sector.
Okay.
Right now, I'm not yet insured in any of the things. I have insured. Have taken only one insurance policy in Tata AIG. It's some investment flexi policy. I need to pay some 15,000 per annum for 3 years.
Okay.
Other than that, I have some savings as some 4 lakhs. So right now, my first question is, which insurance policy I need to go?
Okay.
I have one dependent sister is there. And second question is, I need to take some loan for 10 to 15 lakhs. So what kind of loan I can go?
Right. Sarvanan, doing a good job of taking care of your sister. I'm glad, it just reinforces the way we Indians take care of our family. You said that you need a loan. Do you have a property of your own?
No.
You don't have a property of your own. Sanjeev, what are his options?
See, in case he doesn't have a property of his own, you'll need to go in for a personal loan. And what I would like to recommend is that go to one of these online sites, float your query to multiple banks, negotiate hard. See, because personal loan, you can even end up paying between 24 to 36%, which is very, very high. So, but if you negotiate hard, you should be able to get a personal loan in the range of 16 to 18%. If you manage to do that, then you have done a very good job. And for you, I don't think there is any other option available, since you don't have an asset against which you can take a loan. As you have said, like, Tata AIG, let me just say that be careful. Please send us the details or go to any financial advisor, because there is no 3 years policy. So typically they would have sold you a long-term policy, told you that you need to pay for 3 years. So please look at the product so that you shouldn't lose any money, and what is the kind of features and advantages it is offering. You have the responsibility of your sister and her marriage, and also you're likely to get married soon. So I would definitely recommend going for a term or a trop plan. You don't need to go in for a very high life cover, but at least a 25 lakh to 50 lakh rupee type of a cover. At you are very young, the cost should be about 7,500 per year, which is less than 500 rupees. Or even if you go for a trop, it should be in the range of about 750 to 1,000 rupees a month, which is not much. So go in for one of the life insurance plans, term plans. And also, what I would like to recommend is start making some investment portfolio. So investment seems to be missing from your portfolio. So equity mutual funds, income funds, SIPs. So start investing a bit, because you're investing for your own lifestyle, for yourself. And before you're married and you have major, liabilities of children, wife, other than, I'm sure you're carrying the liability of your sister, who's almost like a child to you. So, but still, you need to start investing and have some short-term corpus available, because it's not only healthy to invest long-term, you need to have short-term savings available to you also.
Some emergency fund is something that we recommend, and of course, the key takeaway here, Sarvanan, is that negotiate hard. Personal loan is probably your only option because you don't have an asset, but please pitch at least 5 to 6 banks. You've got a good salaried income and an assured income, so they must be competing. They should compete for your business. And then next step, financially secure yourself with a term cover and a little bit of SIPs in mutual
And
funds.
let me just give you one suggestion, that your company may have a tie-up with some bank for their salary accounts. So typically where you have a salary account tie-up, those banks are likely to give you personal loans at a much cheaper rate than others. So consider that option. Which company does your which bank does your company tie up for salary account with, and go and negotiate hard through your company. That should get you a much cheaper rate.
Got it. So that's another very important advice coming in. We've completely run out of time. We were hoping to take at least 3 more questions. Not possible, but we will send you all your answers offline via email. Thanks very much, all of you, for joining me. Anil, thanks so much for coming in here to our Bangalore studio. Always a pleasure to have you with us here on Let's Talk Money. And Sanjeev, of course, very well spoken, and of course the best advice to investors. SMS, that's our SMS detail. Money to 56388 is all that you have to send in, or you can dial in those numbers or send us your question through email, money@ndtv.com. Can't get simpler than that, can it? I'll see you again same time next week. Goodbye till then.
This is NDTV, and you're watching NDTV Profit.